Bring in CNBC senior economics reporter Steve Leisman and Neela Richardson, chief economist at ADP. Steve, we'll go to you first. When Rick talks like that, Steve, it's like, yeah, all those factors have been in force for quite a while, and we haven't gotten any upward drift, really. I guess Rick would say, well, now that the tapering is going to end and someday rates go up, maybe we'll get a true price one of these days. Is that his point?
I don't think that's his point, because I think Rick would argue that there is still so much Federal Reserve purchases that it's not a true price. I think Rick would say, and I'm sorry to put words in the mouth of my esteemed colleague from Chicago, I think Rick would say it's a truer price than we had before, but there's still a lot of Fed buying and Fed shenanigans going on in the bond market that it's not an absolutely true price. Let me put it into context, though, Joe. One of the extraordinary things about this entire time of Fed QE and Fed zero rates is that it was down at 25 basis points. If you go back and look at how the 2-year behaved during most of the time that Bernanke and Yellen were doing this, it was up near 48 or 50 basis points. The real issue is not how high the 2-year is. The real issue is how low it's been for so long. We are still have the market, and Rick, correct me on this, pricing in November 2022 as the first rate hike. Yeah, it's higher than it was. It was down near 20. Now it's near 30, but it's not 50. And the Fed still seems to have this ridiculously long runway before the market is really pricing in too much in the way of rate hikes. So you can look at it as the sort of glass half empty. Oh, my goodness, it's 30 now. It was 20. I look at it the other way. It should probably be 50, but it's only 30.
Let me, before we get back to Rick, I want Neela to just weigh in. Neela, you got, I looked at your notes. You've got a lot of thoughts about other things, but just on why the 10-year has stayed here, or whether we're finally in an upward momentum and what's causing it. What do you think of what you just heard?
Well, I think it's the power of forward guidance. When the Fed came out and said, look, we're going to taper first. We're going to slow our bond purchases first. And no, they don't have to be complete before we start hiking, but we're going to really spend some time on this. They bought some more time, and I think that's reflected in the bond market. There's not an expectation, despite a real high level of inflation, that the Fed is going to do anything before they do this one thing, which is to taper. And until they start tapering, I don't think you're going to see a real elevated increase in the 10-year.